Hi everyone, welcome back to 1302. Today we are going to start talking about, or we're going to talk about the late 40s into the 50s and kind of early 60s, and we're going to look at it economically. Which some of you might be going, that's not very interesting, but I'm going to try to make it as interesting as possible. So today, as you saw from the slide before, it's the suburbia and the affluent society. We're going to talk about the Sun Belt, the baby boom, the Federal House Administration, or the FHA, and the GI Bill. So if we're just talking about the 1950s, or this time period, this kind of late 40s to early 60s, if we're just talking about it economically, then it's one of the best decades or time periods in U.S. history. It was a very affluent society throughout this time period, roughly 1944 to 1960. The GDP continued to increase dramatically every single one of those years. And what results and what happens is you have the creation of a large middle class, and that large middle class is going to be defined by both what kind of work they do and the standard of living of these people. And what you have is the emergence of white collar workers. They're owning TVs, they're owning their own homes. And what's very interesting about this is, for the first time in history, the working class and becomes like part of the middle class, like factory workers and those that were these blue collar workers are actually able to move up into the middle class. And so we're going to talk about how that happens and why that happens. And when we look at this middle class, which is kind of defined in this context, like I said, by ownerships of like TVs and cars. By 1960, 80% of American families owned a car and 90% of them owned a TV. Those are pretty high numbers, especially, you don't think about it today because at least in Texas, most families have to have a car to get to and from work. And, most all of us have several TVs because they've become cheap. But in the 1950s, televisions weren't as cheap as they are now. And so it was a real mark of affluence that most American families had both the car and the television. And so there's a standard of living increase that is going to happen. Throughout the and again, I can't stress enough, throughout the 50s, even factory workers are going to see nearly a 50% increase. And so for the first time in history, most workers will obtain what's considered these white collar jobs. And at the core of all of this is the rise in home ownership. There is a drastic increase in home ownership. And again, I can't stress enough, I'm putting in these videos now. I'm able to put in these slides that let you not have to go back and forth between the PowerPoint, but I still can't stress enough that I would like for you to still look at the PowerPoints, because it is a great summary for review, and it also has charts and pictures and graphs and things that are useful. I'm still trying to find a way to put some of those graphs and charts in the videos, but I haven't quite figured that out yet. So in the meantime, make sure that you are at least at some point looking at the PowerPoints too, so that you can get that additional information. But anyway, so you have rising home ownership that is happening, and that leads to what's known as suburbanization. Most Americans live in suburbs today, and that began during this time period. By 1960, for the first time, more U.S. people are living in suburbs than in rural or urban areas. And what that means, because a suburb is kind of like in between, right? Most of you don't live in downtown Dallas. Most of you live in Allen or Plano or Frisco, but they're part of, and I know Allen, I think, has its own county. I'm not as familiar with Dallas's Tarrant County, I'm sorry. But you live in these like suburbs of these larger cities, right? You don't live in downtown Dallas. And that's what is considered urban when we talk about it like this. You have the urban centers, which are going to be downtown Fort Worth, downtown Dallas. And then, of course, rural would be way out like Sunset, Texas, or Bowie, Texas, where you have these very, very small populations. And so instead, for the first time, people are living in these kind of in betweens, the things that we're all used to because suburbanization has been a thing for all of our lives. And so we live in these suburban spaces that are between urban and between rural. And so, but this was a drastic change in during this time period, very drastic. And a big part of this is because of the economic security that I was kind of talking about a second ago. It's a combination of these kind of two things. Millions are returning from the war, and so there's this big baby boom, and there's a spike in the birth rate between 1946 and 1960. And that helps lead to this U.S. idea of what is the perfect American home, the perfect American family. And the baby boom impact is really important on our lives today because these baby boomers, we've all seen the OK Boomer memes, but these baby boomers are now getting ready to retire, and they're drawing, or many of them have retired, and the rest are getting ready to retire, and they're drawing on the Social Security, which is overextending the system for all kinds of reasons that we'll continue to talk about this semester as we wind down. But so they're still very relevant even to us today. So during this time period, you have the creation of suburbanization, and then you also have the rise of the Sun Belt, which is also pretty important when you're taking a U.S. history class in Texas. And what the rise of the Sun Belt is manufacturing and technology began to spread into the South. Remember from your first half of U.S. history that urbanization and that manufacturing and technology kind of had existed in this northeastern kind of region, and then kind of the Midwest, but it kind of like skipped the South. And there were a lot of reasons for that, and you should be aware of them. But during this time period, all of that manufacturing and technology starts filtering into the South, and this is known as the rise of the Sun Belt. And there's a couple of reasons why that happens. And one of them is because of the infrastructure that was part of the New Deal. Now remember, part of the reason why technology and manufacturing didn't spread to the South was because of its lack of infrastructure. Well, with the New Deal, they were creating all kinds of public jobs for like the WPA and the different stuff we talked about in the New Deal. So a lot of those jobs were creating infrastructure. So now all of a sudden in the South, you have government funding that made it possible to create dams, to create roads, to create this infrastructure that's going to allow for manufacturing and technology to come into the South. Another factor that didn't exist before, but that greatly helps the rise of the Sun Belt, is the creation of air conditioning. And that sounds really wild, but imagine living in Texas with absolutely zero type of air conditioning. And so a lot of people in the North didn't want to move to the South. They had no interest in working or existing in the South when it was so hot and humid. And a lot of factories were very hesitant to place them in the South because of lack of any sort of air conditioning. So those two things really contributed to the spread of manufacturing and technology in the South. And lastly, the other part is that a lot of southern states are right to work states, which means that there's less unions. And there's little to no that if they have state taxes, they're very low, and a lot of them don't have state, like Texas does not have a state income tax. And so that's very appealing to businesses that are looking to spread. So all of those things work to create the rise of the Sun Belt, and that's again relevant to Texas because you see a lot of increases in increase in cities in Texas. And one of those, and although I know Arlington is part of Tarrant County and not Dallas County, one of the big examples of that is Arlington. Arlington is considered a fairly large city today. But if you look at the way that it progressed, its population in 1940 was only 4,240, In 1950, it was 7,692. In 1960, it had gone from the 7,692 to 44,775, and only 10 years later it reached almost 100,000 people. So in the course of 20 to 30 years, their population went from 4,000 all the way up to 100,000. And now it's, of course, much, much larger than that. And the reason why you have this population spike is because companies like General Motors came down to Texas and started building plants. And that created a movement into Texas and people in the creation of cities around these plants. And so, of course, Arlington will then get Six Flags and it'll get UTA. And so you can see that the rise of the Sun Belt's pretty important to Texas. And then you also, part of what enabled Americans to enjoy middle class in the 1950s was income distribution was at its best. If you follow news at all today, if you follow politics, if you follow these conversations, then you should hear or know a little bit about, or even if you don't know a lot about it, you should have heard the term wealth distribution, because wealth distribution is at it's really bad right now. We talked about it in reference to the Gilded Age, so it is still a term you should be familiar with from previous lectures as well, but particularly during this time period, the 1950s, wealth distribution was really good. It was very, very good. You had a much higher percentage of the total wealth going to more people. Instead of it going to the 1%, you have it distributed much more fairly. That doesn't mean that it was 100% fair, of course, because I don't know that anything ever has been, but it was much, much better than it is today. And so the 1950s to 1970, during the 50s and 60s up until about 1970, early 70s, then you have income distribution that is much better. And so now we're going to watch a video. You'll see the slide in a second that gives you the link to go watch the video. So go watch it. The video is kind of amusing. It's an old video that was made in 1955, and it explains the current wealth distribution in 1955. Some of it's hilarious because you'll notice Cold War aspects in the video as it talks about the Soviets in kind of a funny way. But it's an amusing comic relief. But watch the video, and then we'll come back and I'll discuss the video just a little bit. So pause it here. Okay, so now you've watched the video, and it's again very interesting. If you watched it and paid attention, he gives some explanations for this wealth distribution, and his are kind of interesting because he talks about how it's morally right, how it's revolves around kind of God and morally right incentives, and brings religion into it quite a bit at one point. But it's still a pretty good video about what is happening during the 1950s. Distribution reverts to inequitable after the 1950s, but during the 50s and 60s, it was much better. And so what made that possible? Why were they able to have good wealth distribution then, and we don't have it now? What made it possible then? And there's a lot of economic, political, and legislative reasons. And so when you look at why they had more equal distribution, one, and the number one reason, or one of the reasons, is the possible earning of high dollars was discouraged by the tax system. This was the era of the highest taxes outside of a war. And so the top 1% of wealth owners had to pay a very, very, very large tax. I'm talking like in almost 90% tax on their income. And so it was actually like if they were in the top bracket, they really did pay a 90% tax on their income. And it was a progressive tax structure designed to discourage people from making too much money. Even the lowest brackets during this time were higher than we're used to. But it really did. And people say today that's unheard of. They say there's no way, you can't raise taxes on like Bezos and all of these billionaires because then they just won't exist. And that doesn't make any sense, because even at a 90% tax, if someone profited $12 billion and they get 10% of that, they still get like $1.2 billion. And I don't think anyone is going to complain about making $1.2 billion a year. But the other part of that is why it contributed to the equal distribution of wealth is because if they fell out of that 90%, that high top bracket, if their net profit fell out of that, then their tax bracket went down quite a bit. And so they actually made more money if they didn't profit as much, which meant that they paid their employees a lot more money, so that would bring their overall profit down and lower their taxes. And so it encouraged, a more equitable system economically for all Americans. And it's something that a lot of progressives today are advocating for, is this really high tax bracket in this upper echelon of profit-making companies. Another thing is to remember is that taxes don't prevent growth. Even if the corporate tax rate is really high, it's part of a much larger context. So a lot of people have this belief that the system is just going to fail if you put a high tax bracket on the wealthiest. But in the past, it's been done, and it didn't fail. Our economy thrived. The United States economy did very, very well during this time period. And also there's high wages. The federal minimum wage was historically the highest rate in the early 1960s. It was a growing minimum wage, which didn't create the economic crisis that everyone says it'll create. Instead, it created a huge economic growth. There's a lot of argument today that if we raise minimum wage, if we give these people more money, if that it's going to cause inflation and everyone's going to raise their prices and it's going to be horrible. But that didn't happen historically. Historically, that's very untrue. If you look at the 1960s, while the minimum federal wage kept increasing to meet standard of living costs, there wasn't a whole lot of inflation, and there was a lot of economic growth, because it makes sense. If you give people more money, they're going to spend more money, which is going to make your economy go up, not go down. So that's important. You also have to look at union wages. And then in 1950, the U.S. auto industry's big three all came together and signed a landmark contract known as the Treaty of Detroit, which gave workers fully funded pensions, a cost of living pay increase, and health care. And it made factory workers fully part of the middle class. That's important, again, when we're looking at the economy of the 1950s and 60s. And that was part of this larger phenomenon known as the Labor Management Accord. So basically, essentially what's happening is there's an agreement accepted for unionized workers. The companies are going to provide benefits, and in return, unions are going to absolutely guarantee higher production rates. And so strikes and all of the things that we've talked about before are going to be replaced by these legal negotiations that will guarantee no interruption in production. And for a lot of people, this was an acceptable trade-off. Companies are going to spend more, but they're going to get guaranteed increases in productivity. Unfortunately, it is after this labor accord that unions are going to start to experience problems. You're going to have this growing divide between union management and the actual workers, whereas they used to be much more connected. After this labor accord and after all of this negotiation between the auto industries and all the factories and the unions and all of the things that's happening, there's going to be this gulf that kind of is created between owners and between, or not owners, but leaders of unions, sorry, and workers. And that's going to lead to corruption, collusion. But for the short term, you have high levels of unionization that means higher wages. So for the short term, it's very productive. And also during this time period, you're going to have access, or much more easy access to consumer credit. Yet again, we talked about the creation of consumer credit in the 20s, but it's going to skyrocket again in the 1950s. And that's going to create credit cards. So part of the World War II war effort to keep inflation in check was to put limitations on installment credit. Remember, when we talked about the 1920s, the type of credit that existed were these installment plans. They weren't credit cards, they were installment plans. And so the government comes back in and says, hey, we need to really be on top of what's happening. So we're going to actually put laws and regulations on these installment plans to protect the consumer. And so that really hindered a lot of the financing companies and what they were able to kind of gouge citizens on. And so they had to come up with new ways of unregulated debt so that they weren't held to these federal standards. And the first way that they did this was through credit cards. Used to, when you got credit cards, like now you swipe them and it's super easy, you stick the little chip in, but used to they were these little credit cards and they would like have to copy them, and it was a very weird process. But anyway, that's not important. Credit cards are created, and consumers have much more credit. Consumer credit card debt will rise by more than 500% in the 1950s and early 60s. With the creation of credit cards, it just goes up, 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 up. Absolutely. Other forms of credit that helped suburbanization, because we're still talking about the creation of a suburban America, even though we've gone kind of all over the place, right? We're still talking about suburbanization and how it is able to be accomplished in the 1950s and early 60s. And part of that is through a change in mortgages. Mortgages changed dramatically. Before the mid-1940s, everyone had what's known as a balloon mortgage. So if your house cost $20,000, whoo, I wish my house cost $20,000. Anyway, if your house cost $20,000, you would have 3 to 5 years to pay it all back. And at the end of this time, you had to, make whatever was left. So there was no structured monthly payment amount. If you didn't pay for 6 months, it was whatever. You could pay as much or as little. But then at the end of only 3 to 5 years, you would owe whatever of that $20,000 you hadn't paid back previously. And you're making interest payments during that 3 to 5 years. So you have this like set interest. It's really crazy. So after the 1940s, they have what's called amortized mortgages. I hate that word. It's a nasty word that doesn't flow off my mouth very well. But what this means is you have a monthly payment that is part principal and part interest, and it is drawn out over a much longer period of time. They're 10 to 30 years. Most people sign a 30-year mortgage. 10-year mortgages are very rare unless you're really wealthy, because they go for, of course, a much higher payment. They usually, a lot of times, will have maybe a smaller interest rate, but a much higher amount of principal paid every single month. So part of the reason they turn towards this type of mortgage is new legal factors that are all connected again to the New Deal. A lot of things that happened in the 50s are results of things that were created or done during the New Deal. And that is, and for this instance, with housing and suburbanization, that's the Federal Housing Administration. the FHA. It provides government insurance for mortgage lenders. And so basically, what that means is banks no longer have a risk. So if you can get an FHA approval or a VA, we'll talk about VA in a second, but an FHA approval, then that means that the bank that it doesn't mean that the government's giving you the money to buy your house. What it means is that they're guaranteeing your loan. So if you get Bank of America to, you know, accept to give you a loan to buy your house, and the FHA guarantees that loan, which makes it more likely that Bank of America will give you the loan in the first place, then the FHA is going to secure your loan. Not the interest on your loan, but they will secure the loan itself. So even if you quit paying, Bank of America will get the original amount of the house back. And so that is going to drastically open up the ability for Americans to buy homes. So if a person defaults, like I said, the bank doesn't get the interest, so they don't make a profit, but they don't lose money either. And that makes the building of suburbs much easier and much more possible. And another law that greatly affected suburbanization was the GI Bill passed in 1944. During World War II, it was a vast federal program for veterans. It was part of the Second New Deal for U.S. vets and family, and it provided education, job training and placement, and loans for small businesses and homes. And this was a really big deal. Immediately, in the immediate aftermath, 40% of all new mortgages were VA home loans, and it's very similar to the FHA. So a VA home loan, the VA does not give you the loan. You have to get a bank to give you the loan, but the VA guarantees it and lets you secure the loan without a down payment. That's what a VA home loan does. And so they introduced this bill. Between 1944 and 1956, 2.2 million veterans went to school, 6.6 million received job training, and between 1944 and 1971, $95 billion was dispersed through the GI Bill. That's impressive. This is a substantial federal program for veterans, and it contributed absolutely to the economic boom of the 1950s. It's probably safe to say that without the GI Bill and the FHA, suburbs would not exist today. And all of this is happening despite a very conservative state. Republicans control the government, but even the Republican Party says that should any political party try to or attempt to abolish Social Security or any of these new programs, that it would be mean absolute ruin for that party. And that's a quote by Eisenhower. Like, Eisenhower was a Republican, and he said the same things. He said we can't continue or discontinue these policies because it will mean our destruction. And so even though it was a Republican country during this time period, a very conservative environment, they were making all of these very economic friendly situations. And so when you look at suburbia in a Cold War context, it's very fascinating. And the next lecture is like one of my absolute favorite lectures to give all year, so I can't wait to get into it. But when you look at what was suburbia like in a Cold War context, well, we're going to pause in a second because I want you to watch this other video that the link is going to be in the next little slide that's going to be inserted right in, and it's the kitchen table debate. And so the kitchen table debate was a debate between Richard Nixon and Khrushchev from Russia, the prime minister of Russia or whatever, the leader of Russia. And in 1959, they're debating the merits of communism versus capitalism. And it is symbolic of arguments where the U.S. Held up suburbia as proof of superiority of capitalism. And so literally there's like this world fair in the Soviet Union where they have model homes from all over the world, model homes from the US, model homes from Russia, model homes from England and all over the world. And Nixon went, and US and Russia debated the merits of capitalism versus communism. And so I want you to pause for a second and watch the kitchen table debates and then come back. Uh, Okay. I also have said it before, and I want to say again, I really would like for you to watch The Atomic Cafe. It's such a fantastic documentary. You can find it streaming for free through a couple of different websites, so I advise that you do so. Looming over, because looming over the whole economic boom of the 1950s is the geopolitical continuation of the Cold War. Everyone's living under this dark cloud of knowing that nuclear war could happen at any time. So it's a very schizophrenic decade. You have the idea US family, white collar, the house, the car, the pets. You have all of this that will become a symbol of the Cold War, a literal ground for debate between communism and capitalism. And you have this perfect US family with apple pie and a string of pearls and perfect kids and the perfect life. And you have that at the same time that you have nuclear war and bomb shelters and paranoia and fear, just constant fear of what's going to happen, and are we all going to die, and is there going to be a nuclear holocaust, and no one knows. And so it's a very schizophrenic decade of advancement and fear. And I mean, they have nuclear power that's been unleashed, and so nuclear power is causing all of these technological advances. But at the same time, is it going to kill us? We don't know. We don't know. And that paranoia is not completely unfounded, which we will talk about next time.